We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks eked out another record on Monday in relatively muted trading as the US and European Union struck a trade pact. The market action kicked off a packed week of big tech earnings, a Federal Reserve meeting, inflation data, and the all-important non-farm payrolls jobs report. And on the back of what was fairly good trade news over the weekend, stocks were actually red today. We started off very green, but we paired a lot of the day's gains as the day went on. However, big tech led the way forward along with energy, specifically semiconductors. Right here, you can see equipment manufacturers and software as a whole, simply because the EU trade deal excludes tariffs from semiconductors. And yeah, that's actually just a big win for Nvidia, AMD, AVG, or Qualcomm, Texas Instruments, the equipment manufacturers as well, and just some of these software names in aggregate. We saw Amazon and Tesla gain as well, and that helped the discretionary space outperform. Meta was up, energy gained as well, and that was really it. Every other sector was actually kind of red today. The S&P 500 finishing flat, down 0.03%. On some instances, on TradingView, they have the S&P 500 gaining ever so slightly and notching another record high. Either way, the S&P 500 was pretty much flat today. Leading was technology, again, on the back of semiconductors, energy, and the discretionary space. Those were the only green sectors. And then we saw red pretty much everywhere else. Sort of a risk-off day, I guess more of a sell the news event more than it was any type of rotation. Gold was down 0.63%, so that tells you what's happening with regards to safe haven buying. But all in all, the broad market was fairly red today. If we look at the factor and size segment, there was only one green sector, and that was large cap growth, up 0.39%. Everything else was red from small caps to mid caps, but a fairly muted day. It wasn't anything ugly. It was just a red day where the indices, coming off those highs we saw last week, were down anywhere from 0.1 to 0.5%. And this all stemmed off the back of the US trade deal. Now, in my opinion, Donald Trump really made the European Union bend the knee. The deal will include 0% tariffs for US goods into Europe, 15% tariffs for European goods into the US. The US will also buy $750 billion worth of energy. Automotive tariffs will also be reduced to 15%, with an understanding that the EU will open its country to more US vehicles and US automotive standards. And this was a really good deal. There was this article here in the Financial Times. He said, there is no hiding the fact the EU was rolled over by the Trump juggernaut, said one ambassador. Trump worked out exactly where our pain threshold is and pressed on it. Absolutely insane. This was a great deal for the US, and that is why we actually did see a lot of solid bullish momentum, especially in the pre-market. There was also other great trading news. US and China talks are currently happening in Stockholm as we speak right now. Scott Bessent is in Stockholm speaking with China delegates, and Trump also said he's shortening the deadline for Putin to reach a Russia-Ukraine ceasefire in just 10 to 12 days. So it was 30. It's now 10 to 12 because he's not happy with Russia and everything they're doing. So a lot of trade news driving the market today. More of a sell the news event, but nothing crazy. And I do think in aggregate, this trade deal, the European trade deal, is bullish. And I think we're going to get a China trade deal by the end of the week. If anything, sometime early next week. And then looking at some market movers, Waste Management, WM ticker symbol, reported what I would call very robust earnings, beating both revenue and EPS estimates. Revenue grew 19% over the quarter. Operating income was up 33%. Very solid stuff. But the big thing out of this earnings, in my opinion, was actually the guidance raise that Waste Management produced. You could see here that the company said that their free cash flow is now projected to be 2.8 to 2.9 billion, an increase of 125 million from the company's initial guidance. The increase in the free cash flow, and this is what's important, the increase in the free cash flow outlook is driven by the recently enacted tax policy policy that restores bonus depreciation to 100%. It's driven by the depreciation offsets that'll come from Trump's big, beautiful bill. And I think this is something we need to look out for companies with heavy capital expenditures like waste management. The stock was up 1.3% in the after hours on the back of this news. The market really loves it. And I think we need to start seeing guidance raises from the big, beautiful bill. That's really going to help out these companies with their guidance. Absolutely insane to see that. It's one of the first companies to see a guidance lift from the big, beautiful bill. And I think more to come. And guys, we're going to talk about waste management and everything about waste management on the second channel. We're going to dive into the earnings in depth. So go ahead, follow me on FinFluential Media, like and subscribe. That video will be out a couple hours after this one. Tesla was up 3% today, bucking the trend of the indices after it signed a $16 billion chip contract with Samsung Electronics. They're going to build a chip manufacturing plant, or they are currently building a chip manufacturing plant in Texas. Tesla's going to be one of their big customers, and the market seems to love this news. And Coinbase was down 3.18% today after a couple of analysts' downgrades. They downgraded the stock to neutral from buy, citing lower crypto trading volumes in the second quarter of 2025. And this is coming off extremely high comps over last quarter and last year. So we'll see if that comes to fruition. To me, it just feels like crypto trading volumes would actually be higher, especially with the nominal volume of Ethereum and Bitcoin. However, Coinbase report their earnings on Thursday, and we'll see how that pans out. And then for everything we saw today, guys, it was 2,400 advances, 3,900 decliners, terrible market breadth, in my opinion. We saw net inflows at the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 actually gaining 0.02%. So some books say falling, some books say it's up. It really depends on what you look at. And the market momentum continues to remain solid. However, a steep decrease from what we saw here on Friday. And we also lost the 5-day moving average. However, we do know that this tends to be very noisy. The longer term averages, which we really love to look at, remain above the 50% mark and look very, very solid in my opinion. Looking at the chart right here, you can see the S&P 500 up 0.02%. So it actually did put in an all-time high. It's 6 all-time high in a row. We've just seen like a linear move to the upside here, but definitely buyers and sellers, as you can see from this wicks on the way up. The Nasdaq 100 up 0.36%, but the broad market, the RSP, the Russell 2000, mid caps and small caps, falling, but again, nothing crazy, like down 0.16%, down 0.24%. It's nothing super wild, and we are seeing a little bit of bullish momentum here in the after hours. The S&P 500, the Nasdaq 100 all gaining, but it's too early to tell. You can see growth outperformed value, telling you everything you need to know. And then yes, US stocks were up in aggregate, but European stocks were down, Middle Eastern stocks were down, Chinese stocks were down, and also crypto and Bitcoin were down as well. However, because this is compared to the weekend price action, if we actually look at a ticker like IBIT, you'll actually see Bitcoin was actually up on the day. And that's because, again, crypto is open 24/7. Volatility was up, spot VIX up, front month VIX down. And very interesting to see on the back of the trade deal, yields increased, but not a whole lot. And the dollar was up in a very big way. That's a big move. This is actually what we expected. We knew the dollar was coming. I've been saying it for a while now. We're expecting 100 in the DXY. We're nearly at that $99 level. That's a bullish engulfing candle. Very, very solid. And again, essentially what's happening there is the trade back to US assets. This is a very favorable deal, the EU trade deal for the US. And so what companies, investment managers and asset managers are going to do now is saying, hey, we're going to sell the euro because we don't like the trade deal that the European Union got. So we're going to sell the euro, buy the dollar, and that's how you get a strengthening US dollar. And that's how you get the DXY up 1%. I do think, though, that the DXY being up 1%, that's a very vicious move. Did weigh on equities a little bit. Sometimes a stronger dollar does weigh on earnings in aggregate, at least intraday. I think longer term, the notional value of something like the S&P 500 is better priced in a higher dollar. However, it does hurt intraday because, the market now has to extrapolate what forward earnings are going to look like with a stronger dollar. So a lot of interplay there, and it's a balancing act between the two, the good, the bad, the ugly, the positive. FTLT was down 0.65%, and then commodities were largely mixed. So you can see it says here it's down, but this is because we've just opened the PM session in the futures, but gold was actually down 0.64%. Silver was actually flat here today, and then WTI was up 2.79% again on the back of that Russian news. But let's talk about the S&P 500 and just equities in general. And you could see, very interesting, another all-time high. You never want to sell new highs, but the index looking a little bit heavy up here at the top end of the range. Sellers came in, sold the top of the S&P 500 and we are in overbought territory. So this does signal that we could see a little bit of weakness here in the markets. This trade deal couldn't really take us much higher. So I am expecting a little bit of weakness. And that's actually what I am expecting sort of into this August period. I am expecting sort of like a weaker August, potentially a weak September before we actually go higher into the end of the year. And that is simply just to digest this massive run to the upside. So ultimately, guys, this is not a reason to get bearish. I'm just saying we're going to expect some volatility over the next month, anywhere from 4 to 6 weeks. Expect some volatility, just a bit of digestion, something to shake out the bears, shake out the bulls, and then we'll go higher to our end of year price target of 6,600. Now, it's going to be a short and shallow pullback. It's going to be a garden variety pullback if we get one. Nothing serious. And I think, if we are going to pull back, we probably find support at the 6,200 area. If we do break the 6,200 area, the 6,000 area right here, again, nothing crazy, something like a 2 to 5% pullback. If we go ahead, measure, you're looking at 5% at the high end, 2%, nearly 3% here at the low end. So that's what I'm expecting, a pullback to this region right here, a reset of expectations, and then we move higher onward and upward, because a lot of very positive things are happening in the market, particularly as it pertains to earnings. You guys want to know something crazy? At the start of the year, forward 12-month earnings for next year, 2026, was $300. So the start of the year, the S&P 500 was right here. Forward 12-month earnings was $300, right, in earnings per share for next year. Right at the top right here, it's now $318. So our forward earnings is moving higher. Next 12-month earnings is moving higher. And if that trend continues, the S&P 500 will continue to move higher. Similar situation. It's a very similar situation in the Nasdaq 100. We're looking for a little bit of a pullback, not going to fall apart, an opportunity to buy the dip and for us to move higher. Now, looking at European stocks, they are digesting the massive move from these lows right here. Very similar to what most markets are doing. Guys, ultimately, if we do get to these lows right here, 535, 527 in the stock 600, go ahead, buy those dips, because I do think we're going to go ahead and take out these all-time highs in the European sector. Ticker symbol ISRA. This is the Israeli ETF. This is a dense ETF of just tech stocks as well as defense stocks. And it does look like, again, we're digesting this massive move we've seen. I think this index year to date has performed incredibly well on a percentage return basis, up 18%. Very, very solid stuff. A little bit of digestion, but I do think we're going higher. And it only trades at about 14 times earnings, guys. So a really good ETF to look at if you want some exposure to the Middle East, but don't want to hold a whole bunch of like energy stocks. If you want like tech and defense, this is the place to look. Looking at KWEB, Chinese stocks, we saw a breakout above the 35. We're now pulling back. Ultimately, what we want to see is sort of like support right here and then a move upward. If we find support and look for signals to go up, we're going to go ahead and target these 52-week highs. And I was actually looking at this index in aggregate. If you look at the weekly chart, guys, Chinese stocks are still in like a 65% drawdown from their highs they made in 2021. Absolutely insane. A 65% drawdown, even more, something like that. Yeah, 65%, 66%, just insane. So Chinese stocks do look cheap. And I do think ultimately, if you are getting in here, aiming for these highs, that is the case. You could then start to look at some of these highs, closer to the $50 area, but we'll take it one step at a time. We're long at the $35 area, and we're just going to hold there for now. There was actually an upgrade from Morgan Stanley on Chinese stocks as well, by the way. Now, looking at Ethereum really quickly, it looks like Ethereum wants to go ahead and break above this key 4,000 area. It's a very, very key level here. A very messy chart. As you can see, we touched it multiple times and they used it as extremely strong resistance. If you go to the daily chart for Ethereum, it does look like we actually want to go ahead and break up, but the bears came in a very big way. And I said this yesterday, and I said this last week at these lows. I said the bulls need to step up right now and take us higher. They have done that, but they need to keep going. They need to keep going. Otherwise, we do risk us going back to this deep zone right here. And it would be a pretty ugly drawdown if we were to pull back and sort of get to the middle here to be a 32% drawdown for Ethereum. So you definitely don't want the bears to win right here, because then we go right back to just 2,500 area, and then you have to go ahead and reset from there. Now, looking at Bitcoin, down 1.15% here on the Monday, up since Friday, however. And again, we're sort of just consolidating at this top end after what has actually been a pretty crazy move to the upside to where we closed. That's a 20% rally, peak to trough. Nothing crazy at all. We're just digesting, and then we're looking for the next move higher. M2 money supply is telling us we will go higher. Diving into sentiment, this is the weekly sentiment poll we do on this channel, and I asked, how are you feeling about the S&P 500 this week? And the overwhelming majority, 50% of you, were incredibly bullish. Only 31% of you were bearish. 19% of you guys were neutral, and it's very, very clear. Sentiment is bullish, momentum is bullish, technicals is bullish. More often than not, stocks do go higher in this type of environment. But looking ahead, what we can expect looking forward. Now, we do have about 4 more days of July just left, and you can see here that the second half of July tends to produce fairly robust returns. However, when we start looking at what we can expect in August, you can see here August 1st, we can actually expect pretty much flat, slightly positive returns in the first half of August, but it does get better here in the second half, where we can expect gains of over 0.5%. Net, August is a slightly bullish / neutral month, particularly when you look at it in the second half. However, when you pay attention to the fundamentals, guys, things look better than ever. You can see here, these are the earnings expectations for quarterly and the full year. For Q2 2025, 6.4%. This number is actually closer to 7.7% on the blended estimates. And in Q3, we should see 7.6%, 7% in Q4 for the full year, looking at 9.6%, and then earnings growth to accelerate in 2026 up to 13.9%. And guys, we could actually see earnings continue to beat to the upside over the next couple of quarters thanks to the dollar. Generally speaking, when the dollar weakens, S&P 500 companies tend to beat their sales estimates, as you can see by this trend right here. We do know that the dollar has weakened by 9%, and Goldman Sachs predict for every 7 to 8% weakening in the dollar, S&P 500 earnings improve by about 3%. The dollar has weakened by about 7 to 8%, so we could actually see a mild lift to these earnings estimates looking ahead, assuming the dollar stays where it is. Now, diving into the macro, guys, you can see the Fed's GDP now still forecasting about 2.5% for economic growth this quarter. We're going to get this data a little bit later on in the week. We're also going to get the FOMC Fed rate decision. The market is looking at a 94% chance that we just maintain. So pretty much, I think we are going to see the Fed continue to hold. But ultimately, what the market's going to be looking to is the expectations for December and what Jerome Powell says where rate cuts expectations are for the month of September. Now, looking at data for the rest of the week, tomorrow, JOLTS openings. That's going to be the biggest number right there. We're looking for a forecast of 7.3 million. And then you can see here we get the GDP growth rate and the FOMC on Wednesday. But ultimately, the labor market data in the JOLTS is really going to move the market. And then in terms of earnings, tomorrow before the open, SoFi and PayPal, these are the biggest stocks along with Spotify and United Health Group. We also have Procter & Gamble, Boeing, UPS, Merck. These all are reporting. So like guys, earnings season officially really in gear right now. And then after the close, the biggest name is going to be Visa, Starbucks, Mara Holdings, Bookings, EA, Mondelez, Cheesecake Factory, Teladoc. So some very, very big names to kick Tuesday off. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.